Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 8, 2022. Bon appetit. Let's look at top restaurant stocks to buy. So I got few names here for you. First is McDonald's. Stock is beaten down. A great stock to buy at this time. And we got Starbucks and Chipotle Mexican Grill. Another stock which is beaten down heavily. And one of my favorite Darden and Wendy's and Yum. Let's look at these stocks here and look at few more and see which stocks we can buy. So with that, let's jump in. So as you see here, we got few names. Top of the list, we got McDonald's. As you can see, McDonald's has got biggest market cap in these restaurant chains. Look, $194 billion market cap, and it's been growing nicely. Look at the sales growth here, $22 billion in sales, and nice sales growth as you can see. And as we look through here, we got McDonald's trying to rebound in the near term in 1 day and 5 day. Even up here, it's middle of the road here. RSI is 53 and still down 4% from 52-week high. And look from a future perspective, stock price is currently at 260 and price target is 284. So that is a good upside here for the stock. And it's got nice growth estimate from an earnings per share as well as revenue perspective for next year. Very sound Altman Z-score tells you this company has got enough money to withstand any financial downturn. And a great Piotrowski F-score tells you books are great and financials are improving, and overall score is also pretty good. It's 51. So with that, I recommend McDonald's for the long-term purchase. And then you got beaten down stock here, Starbucks. It's really beaten down. There are some issues around union workers. So stock is down as you can see here. Look, RSI is 32, tells you stock is beaten down. And you can also look by looking at 1 day, 5 day, 1 month, even 6 month and 1 year stock is down. Normally when the stock is down like this, it's always good to buy, especially a quality stock like Starbucks. Look, it's got $30 billion in sales. From a sales perspective, it's even surpassing McDonald's as you can see here. And net margin is also pretty good here, 15%. So look, from a next year perspective, it's got a nice estimate here. And also from a target perspective, stock price is currently 94. Target price is 116. That's a good upside here and great EPS growth as well as revenue growth for next year. So with that, I recommend buying this one also. It's got a good enough money here, nice 2.9 Altman Z-score, financially sound, and look, it's got good Piotrowski F-score as well as a great overall score. I think it's a good buy here, especially because stock is beaten down. And next one is one of my favorite here, Chipotle Mexican Grill. As you can see here, this is doing great. And stock is doing good, $7 billion in revenue and nice 20% 1 year sales growth and good sales growth when it comes to quarter over quarter and a good net margin of 10%. Stock is beaten down with the RSI 44. It's a good time to buy. Look, stock has been beaten down in all the way to 1 year. Even for the year, it's down. As Omicron fear goes away, folks will start going into Chipotle Mexican Grill and order out, and that'll be a good one for this stock here. Look, 5-year great performance here, 266%, and it's 25% down from 52-week high, just like Starbucks. That's why it's a good buy here. Quality stock beaten down at this time. And then you got Yum. It's one of my favorite along with the Yum China. Both are great ones to buy here. Look, overall score for China is even better than Yum here. And look, RSI for both of them is beaten down here. Very low price, very low RSI. So you could buy both of these names here and they will do well. And we got a few more. Darden is again one of my favorite here. This stock is a great stock for the long term. Look, from an overall score perspective, it's 95, one of the highest rate, along with one more here, which is Texas Roadhouse. So I would recommend buying this one also here with the RSI 48. Tells you stock is oversold here. And QSR, as you might be knowing, it's also a good one here, as 14% net margin and they're doing okay. I mean, not as great as other names here, but it's also good. And we got two more here, Texas Roadhouse and ARMK, and both are good ones. Right now, both of these names are a little bit high with the RSI 61 and 57. Probably I prefer TXRH here, Texas Roadhouse, and it's got a great overall rating as you can see here. And we got a few more here. Wendy's, again, beaten down name here. You could buy low price stock like Wendy's here. You will do well long term. It also has a good overall score and nice 10% net margin. Company is making money. Wingstop is a good one here. If you're a millennial, probably you know and you love Wingstop. It's a good one to buy here. Look, 5-year 523%, and also a good projection for next year. And stock is beaten down right here, even though stock price is 148. Look at the projection here, nice 179 projection in next 12 months. And I've got a few more here. Dutch Bros is a good one, but a little bit higher octane stock here. Right now it's a little hot. I would wait for a little pullback here. But if you want to hold for a while, you could buy Dutch Bro. PS ratio is 7, little high. It was much higher before it came down drastically. Could be a good one to buy. And I got a few more as you can see here. SHAK is another good one here. And this one, as you can scan through here, it's got good overall rating here. Down 46% from 52-week high, completely beaten down, and it's trying to make its move as of now here with the 1 day, 5 day, even 1 month up right now. And I've got a few more as you can see here. We'll go into a few stocks in a little more detail and go from there. All right, so let's jump in and look at a few charts here. From a chart perspective, we got McDonald's. It's a great stock for the long run. Look, stock is doing nicely. Nice uptick as you can see here. Right now it's down and trying to go higher. On the balance volume is trying to stabilize here. So it's a good one to buy. I would probably buy at this level and wait for it to come back and buy more. And then go Starbucks. This is a good one after dropping down big time here. Stock is consolidating. On the balance volume is also trying to consolidate here. If you're a long-term buyer, long-term investor, you could buy this stock here. Completely beaten down by looking at the RSI, as well as stock dropped big time here. And then you got CMG, one of my favorite name here. Stock is sold off as you can see here. Right now it's stabilizing. It's a good one to buy here. Earnings is I think right here as you can see here, but it's a good one to buy. And then you got here YUM. YUM is a good one. Same story. Stock is sold off here, trying to stabilize. If you have a longer term horizon, I would even buy YUM here. All right, so let's look at a few more. So we got here YUMC, YUM China. Look, stock is beaten down, trying to stabilize. On the balance volume is also trying to stabilize here. I would be buying YUM China also. And Darden is one of my favorite. You could buy Darden up here. Look, RSI is 49, middle of the road here. On the balance volume is trying to go higher. That tells you there are more buyers right now than sellers. And then you got QSR, stock is sold off, trading sideways. On the balance volume is trying to go higher. That tells you it's good to jump in and buy some QSR here. And Wendy's is one of my favorite here. Stock is trying to consolidate and go higher. On the balance volume is pretty steady here. You could buy Wendy's also here. So with that, let's jump in and rank some of these stocks and see how they're doing. So from a ranking perspective, we'll quickly look at some of these names here. First is McDonald's. Look, McDonald's is a great stock here. If you own it for a while, if you owned it for 5 years, you would be doing great here, 135%. And as you scan through here, right now RSI is 53, tells you stock is, it's middle of the road here. And look, it's got a nice net margin, 29%. That tells you company is keeping money it's making, 29% of the money it's making. And as you scan through this quickly here, look at the net margin for all these restaurant chains here. Maximum net margin is for McDonald's, followed by YUM. I think that's why it's a good one to buy and hold for a long term. It also gives good dividend. And as you look through here, look, financial health is A and profitability is A. Overall grade is 51, so it's a good one to buy. And then you got Starbucks completely beaten down. Look, down 24%, as you can see here. It's a good one to buy and hold for a while. Look, it's got a great grade from Morningstar from a financial health, growth, as well as profitability. So it's a good one to buy here. And we got a few more here. Chipotle is one of my favorite. It's also a nice stock here. Look at the Morningstar grades, great grade here. And financial is very steady with the 8.1 Altman Z score. And stock is sold off by looking at RSI, relative strength here. So it's a good one to buy here. And we've got a few more as you can scan through here. CMG has got little high price to earning ratio, but price to sales ratio is pretty manageable here. And we got YUM, again a great one here. Look, it's got a great overall score and also nice score from Morningstar here. Net margin is 24, one of the largest one after McDonald's here. It's a good one to buy up here. And I got a few more as you see here. And one of my favorites is Darden. As you can see here, it's a great one. Overall score 95. You could buy this one here. And look, it's done nice 121% in the last 5 years. And we got a few more as you can scan through. I love higher overall score like QSR works out here, and even Wendy's is a good one here, as well as TXRH. TXRH is a little high on the RSI side of the house, 60, and even ARMK is a little high on the RSI side. Tells you stock is a little bit valued here. You could wait for it to pull back a little bit. So with that, Shake Shack is a little shaky, as you can see here. They got a little bit negative return in 1 year, and as you see here, a little bit lower score compared to others here. Net margin is negative. Overall, free cash flow is also negative. So if you're a contrarian, you could buy Shake Shack, but it's not great from a financial positioning perspective. So overall, from a grade perspective, I would say we got number 1 grade for TXRH here, and number 2 grade goes to Darden. Number 3 goes to QSR. And then you can look at the other rating here. So higher the overall score, better. I would compare it that way. So with that, thank you very much. Happy investing and trading. Please subscribe.